Hey guys, John Link. I wanted to give you a little bit of an update on the market conditions and some research, a little bit of information about market corrections and things like that as they happen. Now it's Tuesday, March 4th, 2025, when I'm making this video. I think Mark Sorensen is going to wait for the president to speak tonight, then he's going to have, I think, some communication tomorrow on Wednesday, either a video or maybe an email or some kind of information regarding this correction. But let's talk about it for a moment in terms of uh, perspective. Now, our friends at LPL Financial uh, put out some information about corrections. Interestingly, as I show you, January 23rd of this year, so over a month ago, and I think this is the sentiment that I want to get through. I'm going to read this paragraph. Again, this is from January 23rd of this year from LPL Financial. With the stock market nearing record high levels, it might seem premature to talk about a potential correction characterized by a market turndown of 10% or more, but less than 20%. However, bull markets are not linear, and corrections, though relatively improbable, are always possible. According to our friends at Ned Davis Research, a correction has occurred every 1.1 years, going back to 1928. Furthermore, the last time the market entered an official correction was 309 trading days ago, as of January 23rd, spanning well beyond the average number of 173 days without a correction since 1928. Okay, so here, average occurrences per year. Average occurrences per year. Pullback of at least 5%, 3.4 average per year. Correction of at least 10%, 1.1 times a year. Severe correction of at least 15%, a half a time a year. And bear markets of at least 20%, 0.3. So I think what's happening here and is not unexpected. Okay, um, it's not particularly unexpected to have a correction. We've had a pretty good run of it, and I think we talked about that earlier in the year. I think I put out a video talking about the volatility in the market. It's probably going to be more this year. We've had a couple 20% years back to back. Probably not going to be that this year, but we do expect some gains this year. Might not happen, but we're looking for some gains this year, hopefully in the market. So we are actively managing the portfolios. We're on top of it. We do understand that it's a bit of a, you know, annoyance, if not a little scary. Mark used the term a little scary. I pulled back from that, but maybe it's a little bit scary. I don't know. But it's always recovered. All right. The market always recovers. The worst thing you can do is sell into this weakness. Just can't buy. If you got some dough, buy. Dollar cost averaging, and we have a lot of people doing that, putting money in the market on a regular basis. Great. Taking advantage of some stocks on sale. But don't panic. No panic buying. I don't think you're going to go broke. And so I think we'll be in good shape going forward. But again, Mark will give us more guidance, I think, on this tomorrow. And we do view this as pretty much a normal event. Yes, it's triggered by the tariffs, that's for sure. But we do view this as a normal corrective a part of investing in the stock market. Call me if you need me. Thanks.